Can you analyze Microsoft and Meta? They both went down post earnings. I have not done a look into Microsoft earnings. Microsoft. These are things I'll ask AI and pretty much see what was the main thing. What are the good things? What are the bad things? So revenue looks like it was still healthy. Revenue's up 17%. Cloud and AI remain the biggest growth engines. Microsoft Cloud rose 26%. Means highly profitable, cash generative. Backlog is huge, so there's a lot of demand for this for Microsoft. AI in cloud expenditure, CapEx meaning capital expenditure, pressuring margins, spending heavily on infrastructure come down. Some segments are weaker. Gaming has been a softer spot. That's not a huge issue. Slow down in Azure AI monetization. So overall, looks like growth is still trending upwards and still strong. So when I'm looking at in this context, I just want to pay attention to valuation, right? Is the stock trading at a crazy valuation and whatnot? It's still trading at a 24 PE after today, right? So it's still very compelling. The intrinsic value is not a big thing is not a reason to buy this company specifically here. Wall Street has it significantly higher than where it's at as well. And of course, there's hedge funds that are buying it heavily. And then we have insider buys at around 2 million most recently. So fundamentally it looks good. Where on the technicals would I be looking at for Microsoft here? It's setting up right at the 50. So you're looking to own this position, which is not a bad buy from these areas here. It's pretty much, you had a confluence right there, right? As the stock retraced from this low to this high here, it aligned with this 50 simple moving average. So that was a very strong spot, and it looks like it held pretty strong here, right? From those areas, it jumped up as much as 4.63%. So that is what you're seeing for Microsoft stock here. You expect this level to hold, but these are levels that do need to be expected if this 50 simple moving average fails. So a potential buy within these areas here, ideally you would have bought at these lows here. If you're looking for a buy here, then you look for a DCA lower, right? So this would be too early to DCA. You're probably looking at around back into here to potentially start your second buy if you're already in a buy like that. But if this level goes up, it'll pick up steam to the downside. It's unlikely that happens. You likely get support around here towards a move up, right? But that just depends on how the market's trading at. But that was a strong confluence. So these are like confluences you guys should be looking out for, right? Strong company that has a good move up that retraced towards golden retracement or some confluence, right? So here you had multiple reasons here. 50 simple moving average, 50% retracement. That's a potential buy area, right? So that's what I see from Microsoft. Meta too. Let's take a look at. Looks decent as well. So it doesn't trade at a crazy PE ratio is the thing I like to look at here. Intrinsic value is not something to look at. Wall Street thinks the same thing. So a lot of similarities that we have with Microsoft, right? Bill Ackman, 1.76 billion, a lot of billions into these companies here. 23%. The thing I don't like for Meta here is it trades at the same valuation it typically trades at from a 5-year perspective. But the good thing about if you're looking at Meta is that they are heavily into artificial intelligence, right? They're not a software play that gets disrupted from AI. They utilize AI for growth, right? So yeah, 23.8% growth on a stock that's trading at around 25 PE. That's really good, right? And the reason why the stock was hit in the past, as with other stocks, is because they are investing heavily into artificial intelligence. So that hurts the short term, but that improves the long term, right? So net bullish, nothing crazy there. So from these areas here, I am looking at a technical spot to buy this company here. So low to high, you had the same similar reaction into this, right? The thing you don't like to see is you're right under the 50, so you might get a move where it's like you get a move up towards this 50, and then you get a move downwards. So potentially into here before the stock goes up higher. So that's just some scenarios that can happen for Meta stock there. I think a decent likelihood, just because of where SPY is sitting at. It's sitting up very high right now, the market is due for a pullback, right? So strong movement for SPY. Every time we get too far away from the 50, we inevitably trade back into it, right? Back into it. You're very extended now. You're potentially looking for a move back into the 50. And for stocks that are comprise a lot of the S&P 500, Meta is one of them. So the likely scenario is you probably get some decent move up here, and then you get a move potentially down into these areas before you get a move up. So it hasn't been completely oversold yet. Bearish momentum looks like it's picking up. I think there's a good scenario that we fall into lower into this golden retracement. SanDisk, there's nothing really do with this stock here. Very extended upwards, just not a stock you would touch, right? Just very risky from a risk to reward perspective, right? So very strong price action, but like I said, you extend it too far away from the 50, you'll likely get some retracement to the 50. And what does that leave you? You're like about 28% extended from this area here. So you can quickly lose 28% if you buy anywhere around here. SoFi looks like it's right back at the bottom here. Very volatile stock. I'll just go over here first. So higher than my preference in terms of looking for stocks to trade. So P ratios on the high side, right? Rising credit losses, heavy dilution from capital raises, short seller allegations that's been affecting the stock here. Intrinsic value is not quite there. There is upside on Wall Street. Looking at some super investors here, we have John Overdeck, who bought 22%, Ken Griffin, 234%. Israel Ingler did decrease, Paul Tudor Jones did decrease as well. So you're seeing mixed, right? Let me see. That's pretty much it, right? So a mix between what hedge funds are. And if it's not surprising, right? Higher PE stock. This is a newer company here, very disruptive, but there are very good pros for this company as well, right? We had insider buys, pretty significant ones. CEO bought pretty much $1.5 million worth of the stock here. So that's very good to see from your CEO. And of course, the company is growing, but it's slowed down from prior, which is scaring the market, right? So that's the risk with higher PE stocks too. They grow at a high pace, but if they slow down, that's what scares the market because you're trading at a valuation of 40, right? And growth is slowing down.